That was 3.1. Next two are on presumptive tax. We can take both together. This tax for oilfield service providers. For non-resident oilfield service providers, as well as section 44BB. If you are a service provider to an oil and exploration company, it's a 10% presumptive income on the gross receipts. On that we pay 42% tax. So it's taxed for 4.2% effectively on the gross receipts for foreign oilfield service providers. The question being posed over here is that if the service provider is a subcontractor to the main contractor. We have the main oil and exploration company. We have the main contractor render services to the oil exploration company. And we have a subcontractor renders a service to the main contractor. Then the subcontractor also qualified for the 44BB bill. There is no controversy for the main contractor. He qualified as non-resident. Like over here, the oil company, if you take as a main contractor, it will qualify. But ONGC will not qualify because it's a resident company. But the question in these two examples are these two subcontractors also eligible for the presumptive tax item. Now again, lots of controversy over that because what the section says is that you must render services to someone engaged in the business of oil exploration. Now the company engaged in oil exploration in the business is the main company at the top and not the contractors. So in one view is that you don't get the benefit. But the other view is that as such, if you are in that business, do not own the oil field yourself, you can still get the benefit. So even the contractors, if an oil company is going DC, even they are in that business, or they are owning the oil fields. They are doing exploration, they are doing surveys for the customers. And therefore, even a subcontractor to the main contractor will get the benefit of 44W. Except for met the mud order cases, say that you get the benefit. Then there is one more question over here. What's the practical way out over here? Should we go for 195 and also risk of 48 on disallowance? Now 195 is not mandatory, you can go for a certificate, right? Now suppose AO says that you should have company on 195. In that case, what can he do? So far as the payer is concerned. Now there has been some controversy on this matter. In China there have been many cases. What the AO said was that if you don't come to 195, then I tax the entire amount. And this was the entire amount of the gross payment. Because then 44BB is not applicable at all. And the tribunal confirmed that. But that was a reverse by the tribunal to say that even suppose you go to Form 95 and you want to penalize the SSE or the payer, you can at most add back the profit element in 44BB. You can add back the 10% and not beyond that. So that is the exposure in case you don't go Form 95 and in case it's found that 44BB has been indirectly applied. But if the facts are clear, then there's no difficulty. You can do it based on a certificate and one need not go for 195%. That completes my section.
Now we take up chapters 7, 8 and 4 in that order. So which is FTS, independent personal services, and capital gains in that order. If we go to 7.1, so the facts are, an Indian company needs to repair its machine in India. Being a high-tech machine, only the original machine manufacturer, which is OEM, can repair the same. The machine is sent to the OEM outside India, the original equipment manufacturer. It is repaired and sent back. Now, these are the questions which arise. Is the Indian company required to deduct tax at source? Or before I get into the question, let's answer it in two parts. Let's say these repairs are routine repairs, and the second situation is they are non-routine repairs. So we'll answer all this A, B, C, D in both the parts. So let's first take it's a routine repair. So how it happens? Typical car is broken down, a machine is broken down, it goes as it's a standard routine repair, it comes back. So let's take a scenario of routine repairs. So if it's a routine repair, then there is a circular dated 8th August 95 where question 28 was there, which said where the services of of course, regular, it was in that context, a regular election or on contract basis that fall in the ambit of technical service to attract the provision of 194J. In cases the service of the electrician approved by a contractor, whether the provision of 194C or J would apply. So let's say that there is a dispute, there is a confusion as to whether it's a technical service or it is a repair work or a technical service. So if it's a repair work, does it amount to technical services? If it's a regular, it's a routine work. And as per this circular, 194C and not 194J will apply. So it will be considered as a works contract and not technical services, if it's routine. Further, in the answer they said, routine normal maintenance contracts, which include supply of spares, will be covered under 194C. So, applying this, taking the circular into account, the Hyderabad Tribunal, in the case of Bhel GE, held that these are merely repair works and not technical services. And since the person is outside of India, it is not an FTS. And obviously that person does not have a P in India. Therefore, there is no tax required to be deducted. The B question now, also in arguing the same question in the same issue in a different way. The B question is repair considered a standard service, which is, so they are referring to SkyCell communications, where the service being rendered was a standardized service in the mobile cellular activity. And they said, look, the service recipient is not using technical services. He is using a standard facility. The service provider may be using technology to render that service, but as far as the service recipient is concerned, it is not a technical service, it's a standardized service. So can a repair like this be considered a standardized service? And the answer for that would be, if it's a routine, then it's standardized because it applies to all the customers. Does it make any difference if the technicians have come to India to undertake full or part repairs? Now, whether it's outside of India or within India, if it is the nature of repair work or routine repair work, then merely that should not make it a repair service, a repair work into an FTS. However, in the facts of Zuari Agro, the court held it to be FTS. Now, we do not know whether the services there were routine or not, what was the nature really, but in para 6 in that judgment, it is categorically mentioned that the council has conceded that the service amounts to these particular services. So if an officer wants to use Zuari against us, then we can say, look, there the court went against the SSC because the counsel for the SSC had conceded in the facts of our case, we are saying it is routine services, and notwithstanding that they come here, notwithstanding Zuari Bombay High Court, it is still not FTS. Because there, it was a concession by the council that it is FTS. The next question is human intervention relevant? Now, I presume the relevance of this question is that when this machine goes out for repairs, there are some human hands or human brains working on it, and since there is a human intervention, can an officer say it is FTS? Now, this is a very, so let me put it this way. How does this concept of human intervention come in for technical services? FTS is defined to be managerial, technical or consultancy services. When we talk of managerial and we talk of consultancy, then obviously there is a human element in that. Applying the principle of nociter sauces, or some may use it adusudum generis, then even the word consultancy, even the word technical, there has to be a human intervention. So, human intervention may be a prerequisite for a technical service. But merely because there is human intervention, that doesn't mean every service becomes a technical service. That's the difference. So, it may be a prerequisite for it to be technical. But merely because it is there, it doesn't mean it's technical. So, in the facts of this case, even if there is a human intervention there, if the repairs are routine, then it would not make any difference. And can make available concept be applied? So, in the facts, it may not even be relevant because it should not be taxable. Now, let's take the second scenario when there are non-routine repairs. Now, let's revisit the same thing in the non-routine repairs. So, to my mind, therefore, we cannot take the benefit of that circular nor the tribunal decision of Hyderabad, because those were the cases of routine repairs. Now comes the question, if they are not routine repairs, now I'm taking B and D together, which is standardized service and human intervention. Now, I do not know if you all have seen recently on Facebook, I saw Mercedes factory, how the car is manufactured. Has anybody seen that? I mean, it's amazing, everything done by machines. Everything is being done by machines. So let's say for a moment, wherever this machine is going for repairs, if there is a standardized facility to repair that kind of, to do that kind of repairs. And I'm saying it because I've seen it on Facebook vis-a-vis the Mercedes factory. Let's say if the repair is not routine in that sense, maybe it's highly technical, but it's a standardized facility, and the human intervention is there for operating that standardized facility. So they will go and press they will put the thing there, put it in order, and there will be the machine doing all the work. Let's take a scenario like this. If it is something like this, then by virtue of SkyCell one may say it is still not FTS, it is standardized though a highly technical machinery is being used. And human intervention, if we had argued Siemens case, which I think it was the first case after Bharti Cellular. Bharti Cellular was a case of a set aside. In Siemens case we argued that in the absence of human intervention there cannot be fees for technical services. And we said the human intervention has to be the intervention of the human brain and not the human hand. So when we talk of managerial services, we talk of consultancy services, the human intervention is in the form of a human brain. Here, if it's a standardized facility, then the human intervention is in the form of the human hand and not the brain. So maybe somebody will go and put the machinery at a particular place, the machine will do everything else. So there is no human brain involvement. If these are the peculiar facts, then notwithstanding that they are not, so to say, small routine repairs and it requires huge technological input, yet there may be scope to argue it is not FTS provided both these conditions are fulfilled. So peculiar to those facts, we do not know how those repairs are happening, so I am taking this scenario into account. If there is an involvement of the human brain, then clearly it would be FTS. So there is an exception in that second category also. So in the case of Dale, which is the Hyderabad tribunal, they relied on Lufthansa tribunal. Delhi. Though Delhi upheld the judgment, I could upheld the tribunal decision on routine repairs or not being taxable, but they said that these repairs are not routine repairs. They are exacting and specific. So if it is something like exacting and specific, then it's not routine and it will be taxable. But to get out of it, there are only two ways to argue, which are two sides of the same coin, that all the work is done by the machine and the human intervention is only in terms of the human hand putting on the machine, putting that equipment there. So this will be peculiar to the facts of the case. But if this is not there, then in the second scenario it will be FTS. And assuming it is FTS, then the E question becomes relevant. Can the make available concept be applied? And the answer is yes, like all other treaties, make available concept can be applied. So that takes care of 7.1. 7.2 7.2 is the exception under section 7917B. So let's say if a person resident in India is making a payment which as such is fees for technical services, but the fees are payable in respect of services utilized in a business carried on by such person outside India, it would not fall within the definition of FTS. Or if the fees is paid for the purpose of making or earning any income from any source outside of India, it would not amount to FTS. I will assuming it is fees in the nature of managerial, technical or consultancy services. If the payment is made which is helping me, which is in connection with the business carried on outside India, or if this payment is made which helps me to earn income from a source outside India, then in both these scenarios, even if the service is managerial, technical or consultancy, it will not be taxable in India. Now the issue is, how does one interpret this in situation 1 and 2? And there are some contradicting decisions which I just come to know. You see, what is the correct interpretation in the light of contradicting decisions? So let's take situation 1, where Indian manufacturer of a machinery sells a machine in Mexico. It engages a local engineering company to install, commission and maintain the machine in Mexico. Would it be justified to say that it is covered under the exception? So can the Indian entity say that I have paid this fees for technical services for the purpose of earning an income, the source of which is outside of India, that is my Mexico part. Since my customer is in Mexico, the source is in Mexico, source is outside of India, the fees for technical services is for earning us income from the source of which is outside of India. Now, here there are two contradictory decisions. One of the Madras High Court of a German company with a very complicated name which ends with Bale. Do you know how to pronounce it? Atkinson something. Bale.
Atkinson.
So that was a Madras High Court judgment dealing with 916B. So there it was royalty paid for something like an export sales. But the same clause is there even for royalty. So if a royalty is paid for earning an income, the source of which is outside of India, it will not be taxable. And the Madras High Court held that look, the party is outside of India, the source of income is outside of India, and therefore it is not royalty. That same ratio will equally apply here. However, recently there is a Delhi High Court judgment in the case of Havells. And Havells says that the customer who is outside of India, your source of receipt is outside of India and not source of income. So there are two contradictory decisions in this. Now, if we look into Delhi High Court, where they are making this distinction of receipt and source, I can understand if he says, I am in India, I sold my goods to Parishbhai in India. For whatever reason, Parishbhai told Sunilbhai, who is outside of India, to make payment to me. If these were the facts, then I think Delhi High Court would be right to say that the source of income is not outside of India, the source of receipt is outside of India. But in a case like this, when he is also outside of India and the payment is also coming from outside of India, not only the source of receipt but the source of income also it can be argued to be outside of India. Now, let's take if the Delhi High Court is right, if the source of income is not outside of India, what is the source of income? The source of income therefore becomes my business in India. Now, if my source of income is business in India, then the first phrase becomes redundant. Because what is the first phrase? There are two exceptions. If I'm making payment of this, if I'm making payment in respect of services utilized in a business carried on by such person outside of India, or for the purpose of earning some source outside of India. Now, if we read source to mean business, then that first thing will always become redundant. The first part will always, suppose my business is, source means business, suppose. Then there is no need to write that the fees are used for a service utilized in a business carried on by such person outside of India. Because the source is wide enough to cover business. Then there is no need to put the second exception. So the two exceptions are that the business is carried on outside of India or the source is outside of India. Delhi High Court says the source is the Indian business. So you cannot connect source to business, because the moment you connect source to business, then the first exception becomes redundant, that the business is carried on outside India. So I would still feel, of course it has to be tested, but I would think there is still scope to argue that the source is different from business, because you are making the first clause redundant. As per any principle of interpretation, if there are two words or two phrases and you interpret one of the second phrase or the second exception or a phrase or a word whereby the first becomes redundant, then that interpretation cannot be right. So you cannot say source means business, because if source means business, then you just don't write anything else, no? Then why do you have to write if the business is carried on outside India, if there is an exception? If my source is outside of India, that means source means business, then there is no need to say that as a second exception, that if my business is carried on outside India, also it will be taxed. Because source is wide enough to cover that. That is the ratio of Delhi High Court. So I think there is scope to argue, though there are contradictory decisions, that even if my source of receipt and the customer both are outside of India, my business is in India, it is nevertheless not FTS. But of course, this ultimately the Supreme Court will have to decide. Now coming to the second situation, the parent company of an Indian subsidiary supplies an advanced machine to its customers in Pakistan. So I am an Indian, my parent is supplying machinery in Pakistan. As per the global arrangement with the group of the Indian subsidiary required to install, commission and maintain the machine in Pakistan. So I am maintaining, installing, commissioning the machine in Pakistan. So if that is in the global arrangement, if that is my activity, then I am, so to say, carrying out my business outside of India. So if I pay a fees for technical services in connection with the business carried on by me outside of India, then clearly I fall under the exception and there will be no FTS, even if the payment is made for managerial, technical or consultancy services. Now here I do not know whether there is a purpose behind writing Chinese technicians or it is just coincidental. But for Chinese technicians, there is another angle to it. For a moment, let's say the business was carried on in India. I was not doing it, and the Chinese, there was something done outside of India where I had paid the Chinese technicians who are rendering certain thing in Pakistan. Or let's take the Chinese technicians in the first situation. So, let's say in the first situation, for a moment, where I have sold a machinery in Mexico, I paid FTS to somebody from China to go to Mexico, and he renders certain FTS services in Mexico. And let us say for a moment the Delhi High Court judgment is right, and Delhi High Court says that if the source does not mean customer, so if you apply Delhi High Court to situation 1, it is clearly FTS under the Act. Because Delhi High Court says your customer may be outside of India, your business is in India, your source is in India. So clearly it amounts to FTS. Now, can one take the benefit of the Chinese treaty? Now, in China, what it says, China does not have the famous make available clause. But China defines fees for technical services to mean it will amount to the same thing under the Act, which is managerial, technical or consultancy services rendered in the other state, in India. Now, these services are rendered in Mexico. So, assuming for a moment that Delhi High Court applies, assuming this is FTS under the Act, yet under the China Treaty, though there is no make available clause, but by virtue of the India-China Treaty, it will yet not be taxable. So that was the nuance in this issue of FTS. Now we come to the IPS issue, Independent Personnel Services. Now, here there is a Eversmile Limited based in China, has a branch in India, and hires services of independent professionals from outside India for rendering services in India. As per Article 14 of the DTA between India and China, independent personal services should be taxable only in China unless he has a fixed base regularly available to him in the other contracting state for the purpose of performing his activities. Now, the question is whether Eversmile branch office can be treated as a fixed base of the independent professionals in terms of article between the DTA between India and China. So let us say these Chinese professionals are coming, the office in India, the branch office is made available to him. He has a dedicated space for him. The Chinese professionals are coming and working here. And let's now interpret the particular treaty which says if he has a fixed space regularly available to him. So clearly there is, let's say there is a room demarcated for those Chinese professionals. Does it mean it will be taxable in India? So the commentaries have held that the concept of fixed base is akin to permanent establishment. There the word is permanent, here it is fixed. Now when you talk of something of fixed base available to me, fixed inherently means that that particular thing is at my, it's not permanent, it's not temporary, it is fixed, it's at my disposal. Now an Indian officer will say, look, you're coming to this Indian office, this room is there, this so to say nobody else is coming into this room, it is at your disposal and therefore it is taxable. Now if one applies a test of disposal, then the issue is whether these Chinese employees, can they sit in the office of Eversmile in India and entertain their own other clients? Can they do that? If the answer is no, then that particular thing is not at his disposal. And therefore you cannot say it is a fixed space regularly available to him. So let's say I am a lawyer here. If somebody comes from London, renders services to me for my clients, and I tell him, okay, this is a fixed room for you, everything is there for you, and an officer says, no, this is a fixed space available to him. The answer is wrong, because I have told that particular lawyer who comes from London that no, you will do only my work. But if I tell him, hey, look, you will do my work in this place, you are also free to do the work of other people, then it becomes at his disposal. So if he is coming here to render service to me, then my premises cannot become his fixed base, though on a literal reading so it may appear because regularly available to him, unless I give him the right of disposal, the right of disposition, and I say, okay, look, you can do your own business from here. So on this, there are two judgments. One is Graphite India 86 ITD 384 Calcutta, and there is a judgment which I had actually read it some 2-3 years back, the actual copy. It's Dudney versus Majesty, which is under the Canadian treaty and rendered by the Canadian court. And there also the facts were similar, and they said that the premises of the service recipient cannot be the fixed base of the service provider. Now if we come to yeah.
The judgment of Mumbai Tribunal of Alpapura Mine Camp. Alpapura Mine Camp.
Yeah.
Where it was argued the same thing what you have said.
Yeah.
But it has not been
We are talking about, no, you're talking about which argument?
India-China Treaty of Services Rendered.
Yeah.
Which is, even though there is no make available clause, but it was same thing was argued in Mumbai tribunal.
So what's
it
the
has been held against the.
So we are right now not on the IPS issue right now. You're talking about this issue.
The situation to the previous one.
But was the argument argued as to where the service are rendered? I'm not on the make available.
It was rendered outside India. Payments were made from India by Ashapura Mining to the Chinese company.
So what was the reasoning there?
It was a very badly drafted decision, but it said it is FTS is applicable. That's what they said.
See, what
was
are
argued by Rajan Gura.
who was a member? That will make a big
No, no.
difference.
Mr. Pramod Kumar was a member.
But how did he deal with this in India then?
Actually, it is a very badly drafted decision, but ultimate conclusion was that it is.
Yeah, I think what he said was this. Of course, we are not agreeing on that. What I mentioned to you, see, in the China treaty, there are two clauses. One is definition, and second is deemed place of accrual. So, if you see the China treaty, the part that we are discussing, at this Article 12.4, which is FTS means services rendered in the other contracting state, means in India. For India, then it's not FTS account outside the definition completely. But that's the argument. Because only this treaty has got these words, no other treaty has got these words. So the tribunal said, look at Article 12.6, which says FTS shall be deemed to arise in a contracting state when the payer is a resident of that state. That gives deemed accrual, and by applying these words, 26 becomes meaningless. That was 1983. Although our preference is that 12.4 is stronger than 12.6, being the unique provision in China treaty. Unfortunately, even AR agreed with the tribunal. In fact, I got the citation also, which I can show you since we are on the point. So all the rulings so far are surprisingly against us. Ashapura is 40 SOT 220. And then there are two AR rulings, Inspectorate Shanghai Limited and Guangzhou Usha International, where both have said that is taxable in India, even though performed outside, unfortunately.
Both are China treaty.
Both are China treaty. All three are China treaty.
Would you believe in there is still scope to argue?
I think so. You know what the AR says? You know what the AR says? Interestingly, what the AR says, it's Article 12.4 says, is payment for the provision of services. It does not say performance of services. So they are performed also in India, but they are provided in India and they are used in India, and therefore it is taxable.
That is what even Ashapura has said.
So that is their line of
There is no high court on the point.
There is no high court so far.
Let's hope.
So this little benefit we got because 5 words has been gone by this rulings. That is sort of.
We'll break for the tea. We'll reassemble in 10 minutes.
Only